Hey, what's going on out there, everybody in the world, ladies and gentlemen, men and women, males and females? Welcome to another video, Stocking with your boy, Profit Peeps, where all the real smart investors win more money than lose money. Part two, welcome to another day. It's Saturday, okay? We got better things to do, just like this, to get prepared for the next week so we can feed our families. Okay, it's pretty simple. A lot of those out there don't know how simple it is. And, it's psychological. You got to put yourself in a position to do so. You want it. And first of all, bump and grind against that like button, share the video, subscribe to the channel so the notifications can accelerate. Okay. We definitely want everybody to understand that when it comes to investing in the stock market, the rule number one you got to do is have patience. Rule number two, you got to save money. Okay, you got to save money. That's the key to success in the stock market. You can't just put $5 in and think you're going to get 500. It don't work that way. In most cases, a lot of stocks, that's good stocks, it's pretty much expensive. I'll say if you want to buy 200 shares, of something that's good, you got to at least around $30, $40. You got to have at least close to $5,000 in the stock market if you want to buy multiple shares and see a better increase in your income. You have to save. You ever hear people say, yeah, I just put little by little in left and right. I just keep putting, where they get it confused that is, they got putting money in a buying power mixed with putting money into stocks. You don't always have to buy stocks every time you get money, that you receive money. The whole key to success is put money in your buying power. So when things drop, you check the news out. You do your fundamental research. You figure out, is the revenue still doing good? What's new with the company? Has the revenue been dropping? Is it any good news that's on the way? These things is very important according to the fundamental research. Check out the price per earnings. If nobody don't know how that works, what you're doing is you finding out revenue of the company, the net profit of the company, and you take that and you pretty much dividing it into the amount of the shares that they have. I'm gonna break it down real simple. You have to divide that into the shares that they have. Okay. Once you get that amount, that's considered earnings per share. Okay. You take that earnings per share that they got from what they make, what they netted throughout the year, dividing it into, I'm making it so y'all can really know how to do this. You divide it into how many shares the company have, which is pretty much the average volume, You take that amount and you divide that into the amount of the stock. So whatever the earnings per share is, you divide that into the stock itself. If you get at least around under 15 or under 20, you're fine. If it's anything over 20 or 25, it's overvalued. It's overvalued. It's not pretty much worth buying the stock. If you get anything under 15, it's pretty much a great stock. It's a good buy to jump in. All right. For those who don't know, that's the PE ratio. Okay. That's the end result. So if the PE ratio is under 15, even if it's 20, is on the borderline, but it's still not bad. But if it's anything over 20, you don't want to pretty much deal with that, or 25. But it's your choice. This is what I do. This is how I operate, and this is how the greatest has operated. And once you see that, this is a good stock. But that's pretty much to be concerned if you're considering to invest. If you're trying to invest in hold long term, that's important. But you still want to do your maintenance. You still want to check on the company like you will be the owner of the company. It's not like you are the owner of the company. You will be the owner of the company. You'll own multiple shares of it. Now, we're going to get into some charts for traders, people who don't want to hold long. And I get it, because there's a lot of stocks that I don't hold long, because when crisis hits, such as the pandemic, and crashes take place, and you don't know how long those crashes is going to recuperate, it's very important to hold cash. It's very important to do some trades, jump in, snatch you some nice profit, and jump out. Okay, you might pay some good short-term taxes, but that's all good. Uncle Sam is our homeboy. We got to give our homeboy the cut. Don't be stingy and don't be selfish. You will never make it up. All right, so I'm gonna show y'all these charts that's gonna help y'all elevate your standards when it comes to trading. Okay, it's very important. I want y'all to stay tuned. All right, so taller patterns with larger real bodies or longer shadows typically perform better than shorter patterns, measured by taking the difference between the highest and the lowest of the low of the pattern. Measuring technique, add the height of the pattern from the high of the last candle. So this here, number 4, is an advanced block. Bullish continuation, overall, a 4-star. Okay, so this is what y'all looking at. 3 of these is bullish when you see them together. It's considered an advanced block. All right. This is considered below the stomach. So below the stomach, you'll have what's bullish and what's bearish. So this is a bearish reversal. Okay, this is a pattern description, forms at the end of the downtrend and forms 3 consecutive open candles. On the second and the third candles, the price opens below previous day close, but finish higher at the close. This pattern can be bearish reversal, but performs best with the primary uptrend with the close above the high of the third candle. Above average volume throughout the formation, the bullish continuation increased performance. Taller patterns with larger real bodies or longer shadows typically perform better than shorter patterns. Okay, so this is below the stomach, as y'all see. All right, now is at the top. It already had its run. This is the part where you snatch profits. When you see this, you see the larger candle closing out. So you'll see that before you take. Once you see that, you know it's about to go down, because you'll be at the top. You already jumped in at the bottom. Now you see the highs. You see at its highs, you already did your support and resistance level. But then you finally look at the stock. You look at them, and you see that long orange one candle with the price rejection at the bottom. So that means that is definitely about to drop. Okay, and you snatch profits and get out of there when you see this. All right. All right, so now that y'all have a better understanding on part 2 of charts, go check out the last video, and I also have another video about charts as well. But I want to break this up piece by piece, day by day, so y'all can actually watch these videos specifically and really understand the way this works. I don't want to put too much on y'all because y'all can get confused and get bored. We want y'all to learn something piece by piece and go about your day and have a beautiful time with your family. Remember, Rome wasn't built in a day. It was brick by brick, brick by brick. And that's what we're doing here. All right. So once again, like, comment, subscribe, share the video, and tell some people about it. And let's grow together, y'all. Understand, in most cases, when you want to make some quick money in the stock market, all you have to do, like I said, is have the money saved, buy multiple shares, understand the resistance and support. The support is high. For instance, if you look at this right here, this is considered let me bring it over. This is considered a resistance level. Boom, boom, boom. Right here is a resistance. Down here is a support. This is a support level. Once you recognize the support levels, you recognize where you need to jump in at. And when you recognize where you need to jump in at, that's when you get a better understanding on if you want to hold it or take profits. And in most cases, you could jump in, buy 500 shares or something, let it go up. Even if it go up $2, it can even go up. It can even go up cents. It can even go up, I'll say 30, 40 cents. And you can make a quick $200 within one day, within minutes, within a matter of minutes. And you can snatch profits and get out of there. And that's how you can play the game and win. All right. So remember, winners roll with winners, leaders roll with leaders, and good followers always follow good leaders to become a good leader. Y'all be safe out there. Okay. Stay away from negativity. Stay positive, and just remember, even if it's a bad trade, it's good to hold it, long as you got a good stock. So, for instance, if you make sure you have the good fundamentals. Make sure you're jumping in at a good time, making sure, because it can turn on you. If you buy 500 shares and you ain't jumping at the right time, it can turn on you and go the opposite direction. Now you got to hold it until it come back up. And if you got a bad stock, you didn't do the fundamentals on it, you just picked anything, trying to make some money. When it comes to trying to trade, and even if it go the opposite way on you, you out of luck if it's a bad stock. I'm not going to say you out of luck because all stocks come back. It just, you could be out of luck for a couple years, you know. So what you want to do is invest in something that's well known if you're going to put your hard-earned working money into an investment. So that's my key for y'all today. Okay, y'all should use that key and unlock your mindset and understand that we out here to win. Y'all enjoy your weekend. Peace and love. Your boy.